Hi everyone, recording for the 15th of August 2019. Wishing you all a very happy Independence Day and a happy Raksha Bandhan. Now we've seen a pretty volatile week, starting with the markets first heading lower and then higher, and then you have all this overnight action. Now what happened on Tuesday was that even though Reliance Industries had a big up day, almost 10% up, the Nifty ended up being significantly down. This is extremely rare because on such a big day, for a key index stock, we've rarely seen the index go completely the other way because of broad-based selling. Now, the question that came to me is that would you change your downside expectations for Nifty based on what Reliance has done because it's pushed up the base level for the market? And my answer to that is no, because when it comes to the index, you're studying mass psychology, a combination of 30 to 50 stocks that include a large part of the market cap and behavior of the public at large. And therefore, when we study that, the outcome does not really change at a mass level in terms of what is behavior. So the levels that we actually calculate, which are Fibonacci ratios, already account for behavior of the crowd put together, and a single stock's movement doesn't really change that at an index level. So you wouldn't really change your expectations based on what one specific stock really ends up doing. That said, following that, we had news overnight from the US. And the US markets actually had rallied because they've postponed some of the duties on Chinese products. But that did not keep it from holding on to those gains, because you did get a rally even in our own market yesterday, but not getting past the 11,200 mark that I discussed in Tuesday's video. And therefore, expectation remained that you would see further weakness to the downside. And I think that seems to be the likely case given the overnight selling that has resumed. Now, this selling has resumed on the back of US stocks giving up significantly, especially because the 2 to 10-year yield inverted. But note, part of this yield inversion is happening on a risk off trade where stocks are selling off, driving bond yields lower. But of course, bond yields have been falling ever since January, since the Fed started sounding dovish. Now, often people take that as an indication. You had several of these rate spreads actually turn in with negative yields for quite a while, but the 210 spread had still not done that. And now that happening, the indication has been read into that, well, into the next 6 months, you sometimes end up getting a recession. However, it takes two negative GDP growth numbers to actually call an official recession, or that's at least the definition that the market has been pushing upon the public at large. And that means it takes 6 months in any case to really officially call it a recession. In the meantime, you already have slowing growth that has to percolate down to GDP numbers, and therefore the market start anticipating this well in advance, and that's where the volatility is coming from. Now, I did think a couple of days ago that Asian markets had actually sold off and formed or were in late stages of forming some kind of 5-wave decline from which you could get a bounce back. Now, I'm looking at least one more leg down in Nifty before we can actually complete a 5-wave advance even for the index itself. But if the US market continues to sell off, because it's looking like an extension, at least it broke the swing lows in both the Russell and the transports, and that was not a good sign. If that's a lead indication of a third wave, then I don't see the Dow really stopping before 24,000, in which case I think selling becomes much bigger. So that's the scary part of it. If somehow the markets do pause and the oversold Asian markets do get some kind of relief, then we do have room for some relief, because some indicators may start getting oversold if the markets continue to sell off, at least as far as our market is concerned. So this setup has a mix of themes, but we are seeing continued selling from one source or the other. Therefore, calling an oversold condition is really hard. So you have to watch it really closely. What happens in the next 2 days. Fortunately, our markets are closed today, so you'll get some additional action from US overnight that should let us know whether this current move is extending or we are still pausing for breath for a couple of days. So I think that we'll be watching out for. In the meantime, well, all this bad news has been around. We've seen the dollar actually strengthen again. But the dollar index itself has not broken out of its narrow range for several months. And that's leading to confusion in terms of how the metals and commodities behave, because the typical inverse relationship is not really playing out across the board. You have oil, which is weakening, but very volatile. It jumps up and down several percentage points, but not going one way down. At the same time, you have nickel that has rallied for several weeks and is getting extremely overbought. and you have zinc, which has been falling for several weeks and getting oversold. So you have these completely opposite readings in some of these commodity names because of the confusion that's around the dollar. However, other dollar pairs which are not in the developed market space in the DXY have actually been showing weakness in currencies against the dollar. Many of them have fallen significantly. One of the biggest ones in the last couple of days was the Argentine currency. And that was really big because I think it was, if I'm not wrong, almost a 20% move, and it caused its own local stock index to react sharply for a single day. Losing, I don't know, 20-30% right there in a single, very, very unusual moves happening suddenly out of the blue in some of these markets. And so the strength of the dollar versus emerging market currencies, I think, is pretty loud. It's still not showing up in the developed currency space. And so with that, I think I'll leave it to the moves that we have to see tomorrow. Of course, 11,200 remains the big hurdle. And with that holding, we continue to look to downside as far as the Nifty is concerned. That's all in this update. Thank you.